What's going on, guys? I think no matter what you're doing in life, it's always good to have mentors and people that you kind of look up to. And one of those people that everyone looks up to in the stock market is Warren Buffett. And what we're going to do in this video is we're going to take a look at Warren Buffett, how he compares to basically a very new fund manager who a lot of people have started looking up to in the last kind of couple years. And then we're also going to take a look at Warren Buffett and a move that he's made over the last kind of few months in the fourth quarter of last year that has paid off big recently and just kind of shows some of how Warren Buffett approaches investing into stocks. So I hope you guys enjoy the video. If you do, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. The first thing I wanted to talk about today was this title here. And it's Warren Buffett has nearly caught up to Cathie Wood after the tech stock guru vastly outperformed him in 2020. So this is a huge headline. A lot of back in 2020, people were talking about Cathie Wood, how she was an amazing investor. They were comparing her to Warren Buffett, the basically new Warren Buffett that she kind of knew and was going to outperform the market consistently over the next 20 years, and that Warren Buffett had fallen off, that he didn't know what he was doing and he wasn't in touch with the times and all these different things. And what we can see when we get down to this chart down here is Warren Buffett and Cathie Wood from 2020 to basically now have actually shown or had the same amount of return over the long term, and the long term only being 2 years. So that's not really the long term, but not looking at over a six month, 2 year period or 1 year period basically. So Cathie Wood we have here in red, that's the ARK Innovation Fund, which is ran by Cathie Wood, and then the blue fund here we have actually Berkshire Hathaway B shares. And basically you can see Berkshire both had a pull down here in early 2020, which was obviously due to the pandemic, and then after that Cathie Wood and Tesla basically ran up huge in here. She had a lot of stocks that were just outperforming and doing excellent, and then Warren Buffett kind of just slowly sneaking up over time, and you know, making his way up to kind of where he's at now, which again is basically right where Cathie Wood's at. And the biggest thing that I want you guys to kind of take away from this is you really shouldn't compare yourself to other people, right? If you compared yourself and looked right back in here, everyone was looking at Cathie Wood and saying she was the greatest investor, she was the next Warren Buffett, and they were looking at Warren Buffett basically, right, saying he'd fallen off. But over time, you know, they're in the same realm, you know, in terms of return at where they're at right now. And who knows 5 years from now, Warren Buffett could be much higher than Cathie Wood, or Cathie Wood could be significantly higher. No one really knows. But comparing yourself in the short term by saying that oh, you're an amazing investor, well, your buddy or someone is down here and not doing so hot, you know, you never know what could happen. Things turn around fairly quickly, as you can see here. In basically a year, Cathie Wood went from being 300% higher than Warren Buffett to being at the same level. So really don't compare yourself. Focus on your own kind of journey and focus on what you believe in and stocks that you believe in, and really don't try and mimic what anyone else is doing. You know, have faith in your abilities and your abilities to pick stocks and anything in life, and keep moving forward. So really that's the biggest takeaway that I wanted to give you guys here. There's no shots on Warren Buffett or Cathie Wood. I think Cathie Wood is going to be a great investor over time. I think she has a lot of positive things going for her. I think she understands the stock market. I think she has a very Warren Buffett-esque type of approach to things. The difference is she's very innovative on her approach to it, where Warren Buffett is more kind of tried and true types of strategies. But anyways, let's go ahead and get into something that Warren Buffett has actually done more recently that has kind of mixed up this whole thing and actually shows Warren Buffett still has a little bit of kick left in him. So Warren Buffett definitely has some kick left in him. So what he's done over the last over the fourth quarter of 2021 is Berkshire Hathaway bought over basically $1 billion worth of Activision Blizzard before they were kind of speculated or looking at being acquired by Microsoft. So we'll look at the chart here in a second for Activision Blizzard and basically about where Warren Buffett would have bought the stock. But you can see here it just talks about basically he bought the stock. He bought the stock on the news that basically a lawsuit, right, around the sexist culture within Activision Blizzard had basically driven the price down. So the reason we kind of know this information is Warren Buffett actually has to submit a Form 13F to the SEC that kind of shows what he purchased over the last kind of quarter, and that was on it, and that's released, and that's under public record. So he purchased over 14.7 million shares worth close to $1 billion in the final months of 2021. And again, like I mentioned, Activision Blizzard had tumbled late in the year to a low of $56.40 following a lawsuit from the California Department of Fair Employment and Housing, which alleged the company and subsidiaries fostered a sexist culture and underpaid female employees relative to their male counterparts. And then down here, basically, this is kind of the news that broke that drove up the stock most recently in January of 2022. So obviously after Warren Buffett had purchased his shares, the tech giant of Microsoft had put out plans to acquire Activision Blizzard at a share price of $95 a share, so even higher than where it was before. I've actually done a video on Activision Blizzard. I did it back when I originally started purchasing shares, which was around the $60 kind of dollar mark, and yeah, ever since then it's just basically ran up on that news that Microsoft was going to purchase it. It was just perfectly timed. I'll link that video down below, and you can check it out if you'd like. But basically, what's crazy is after purchasing their shares, Berkshire, basically their Q4, their position was worth now about $1.4 billion. So they made a 40% return on their money just from this purchase of Activision Blizzard. So really crazy, and this is a very interesting kind of buy from Berkshire Hathaway, and potentially this wasn't done by Warren Buffett because he does have other managers that manage some of the funds, but overall it's kind of very interesting because it's a tech type stock, very new aged, and Warren Buffett isn't known for purchasing stocks like that. So very interesting purchase. So here we have the chart for Activision Blizzard, and you can see in here, this is the yearly chart. Back kind of at a year ago, the stock was around that $95 mark. So it makes sense that Microsoft is purchasing Activision Blizzard for that amount. But ever since they kind of had this announcement that their culture of the company was very poor, the stock has kind of ran down. And then they had the announcement of the lawsuit, and this was basically in the fourth quarter, and the stock just fell off completely. And you see this little spike in here. I'm not going to say for sure that was Warren Buffett basically buying in there, but I wouldn't be surprised if he bought some shares kind of in that time and then probably bought more as it kind of trended down in here. But overall, we know that he purchased in the fourth quarter, and it had to have been kind of in this time frame right in here. So overall, he basically timed the bottom almost perfectly, and then the stock ran up here on the news that Activision Blizzard was being bought by Microsoft. So you can see it ran up from kind of $64 in here all the way up to $82, and then kind of has bounced around that mark for the last few weeks. So overall, kind of gives an idea of what Warren Buffett kind of saw in here, and what he's kind of lucked out at almost hitting the bottom perfectly. I wanted to end off the video with kind of two things. We'll end it completely with basically Warren Buffett talking about how he purchases and how he looks at news and stocks like that. But overall, I wanted to say that when you look at this type of purchase from Warren Buffett, basically a stock that's been beaten down from basically news, right? And you're looking at the stock and judging whether you want to buy a stock or not. What Warren Buffett is doing is he's looking at the underlying business, right? And when you see a stock that's beaten down like this, right, obviously cultural problems, and I talked about this in my Activision Blizzard video, and if you want to go more in depth, again, check the link in the description. But overall, if a company is affected by negative news and the stock price is being beaten down, the real question you need to ask yourself is the underlying business being affected? And in this case, when you look at an Activision Blizzard and look at the people who are buying games that Activision Blizzard has, basically you're looking at a teen population to maybe early 20s, maybe into your 30s. But overall, if you look at those types of people, you really should get the thought process that they are not going to be paying a whole lot of attention to news in the first place. And the people who are paying attention to news, they really aren't going to probably care a whole lot about whether the culture at the company, the game that they're purchasing, they're really not going to care about that. They're still going to buy the games. They're still going to look and play them on a daily, weekly, whatever basis. So how does this affect the underlying business? And you should really get to the case that it probably doesn't. And I would have to guess that that's kind of the same thought process that Warren Buffett took. But overall, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you subscribe. But we're going to end off here with a little bit of Warren Buffett.
Closely?
Yeah. Oh, yeah, but we watch the prices of things we do more than current events. Because in the end, we aren't buying them because what's going to happen next month or next quarter. You know, we're really buying them because we think they'll be good businesses 10 years from now. If somebody came to us with a good business today, we'd buy it, and we'd buy it regardless of what's going on in the tariff situation. We might have, this won't be the case, but we're more likely perhaps to get something when other people are fearful, and you see that in a big way instantly in a market. You know, in the market for businesses, it's still there with people's minds.